Every month, on the 5th or the 10th, silently, without noise, money leaves millions of Indian bank accounts. 500 rupees, 2000, 10,000. This ritual is called SIP. But have you ever paused and asked one simple question? Where does this money actually go? Who is sitting behind the screen deciding which stocks your money gets invested into? Today's story is about one such invisible giant that quietly manages the financial future of crores of Indians. ICICI Prudential Asset Management Company. This is not just an IPO. This is the story of how money itself is managed. And today, for the first time, this machine is inviting you to become its owner. This is the fourth largest IPO of this year by issue size, which is 10,602 crore. The issue will go live from 12th to 16 December. So, what does this company really do? Let us strip away the jargon. ICICI Prudential AMC is not a bank. It's not an insurance company. It is not a stockbroker. It's a money manager. Its job is extremely simple to understand. People give them money, they invest it, they grow it, and in return, they charge a small fee every year. They operate across mutual funds, portfolio management services, alternative investment funds, and advisory for global clients. In fact, they are the second largest mutual fund house in India. Whether you are a college student starting with 500 SIP or a businessman investing 5 crore, the job of the company remains the same. Protect money, grow money, and do it consistently. As of today, this company manages 10,14,760 crores of investor money. Let that number sink in. India's GDP is roughly 330 lakh crore. This single company is managing more than 3% of India's entire economic output in mutual funds alone. In simple terms, every 13th rupee that flows into mutual funds in India is handled by this company. That tells you the scale. This company was incorporated in 1993. Back then, mutual funds were not household names. SIP culture did not exist. The stock market was seen as gambling for the rich. Fast forward to today, they now operate 143 active schemes across 272 offices in 23 states and 4 union territories. From metro cities to small towns, from first-time investors to seasoned portfolio builders, this company has built one of the largest money distribution networks in the country. As on September 25, the company has 1,10,719 institutional and individual mutual fund distributors, 213 national distributors, and 67 banks, which effectively sells their schemes. Now comes the most important part. Unit economics. This is where most people get confused. Let me explain with a simple 100 rupee example. Imagine you invest 100 rupees in a mutual fund. That 100 rupees is invested into stocks and bonds. The AMC does not own that 100 rupees, you do. The AMC only manages it. For this service, they charge a small annual fee, usually between 0.5% to 2%. So on 100 rupees, their yearly income may be 1 rupee. That sounds tiny, right? Now scale this 1 rupee across 10,14,760 crores. Even a 1% fee on that becomes over 10,000 crores of annual income across the industry. And this company alone earns nearly 4,977 crores in revenue in 2025. Now understand something powerful. They do not manufacture anything. They do not own heavy factories. They do not maintain warehouses. This is an asset-light and cash-rich business. Once money comes in, operating costs stay controlled. That is why profit margins are so high. Now let us look at their key financial growth. Revenue growth of 32% in 1 year and a profit growth of 29% in 1 year. All of this with a profit margin of over 50%. This means that for every 100 rupee the company earns, more than 50 rupees becomes pure profit. That is extremely rare in any industry. Their balance sheet is also strong. Now let us zoom out from the company and look at the industry. Why are mutual funds booming in India? Because people's saving behavior is changing. Let me show you one powerful data point. If you can see, India is far behind at just 20%. This means that Indians are still underinvested in financial assets. As incomes rise, education improves, digital platforms grow, and SIP discipline spreads. This 20% can easily double over the next decade. which means the total mutual fund industry can double. And you know what's interesting? When the industry doubles, AMCs do not need to work harder. Their income automatically doubles because they charge a percentage of AUM. This is called structural growth. Now comes the question of valuation. This IPO is coming at a valuation of around 1,07,000 crores. The expected PE ratio is around 40 times. Let us compare this with peers. You can clearly see that the leaders of this industry trade at premium valuations. Why? Because growth visibility is high, cash flow is predictable, business risk is lower than most sectors, but yes, valuation is not cheap. Now, let me speak the hard truth. This business looks safe, but it is not risk-free. Risk number 1, market crash risk. If markets crash, AUM falls. When AUM falls, fee income falls instantly. During severe bear markets, AMC revenues get hit. Risk number 2, product underperformance. If their funds underperform benchmarks for long periods, investors redeem their money. Less AUM means less income for the AMC. Risk number 3, brand risk. This company benefits from the trust of the ICICI and the Prudential brands. Any major scam, regulatory issue, or public credibility damage can severely impact inflows. And risk number 4, competition pressure. More passive funds, more direct plans, more fintech platforms squeezing fees. Over time, fee margins can reduce. So while the business is powerful, it is not immune to cycles. Look at the bigger picture. Every month, millions of Indians trust this company with their future, their children's education, their home dreams, their retirement safety. Now you are being offered the opportunity to own a slice of that trust business. The real question is not whether this IPO will list at a premium. The real question is simple. Do you want to own a business that quietly earns money every time Indians invest for their future? If yes, this IPO deserves your attention. Do let us know in the comments if you are planning to apply for this one. And for more such informative videos, do subscribe to our channel.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.